what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Good morning, everybody. Hope your Tuesday is off to a great start. Welcome to the morning show. I'm Spencer Israel. I've got JC Parets and Steve Strazza with me here. We are ready to go. Let's see what's on the docket for today. We're talking earnings, right? We got Zoom, we got Lowe's, we got Dick's Sporting Goods. I know JC is ready to piss people off with his rants, and Strazza has some insider buys he wants to highlight for the hot corner. So a lot going on. Guest for today, we got Frank Cappelleri from CappThesis on the show in about a half hour from now. Kimmy Sokoloff at 9:15, and Patrick Dunuwila, editor of the Chart Report, at 9:45 Eastern Time. So you know what to do. Smash the like, roll the intro, wake your neighbors. Let's go. It's time for the morning show. What's up, everybody?
What is up? What is up? Happy Tuesday. Big game 4 tonight, Miami Celtics, after the Lakers got swept. So is Miami going to finish it off and face Denver later this week? I don't know.
Yeah, definitely. It's over. They quit.
That's
and
it?
Hopefully it is, because you don't want them to get to rest for too long.
I mean, Jimmy Butler's ankle. I mean, either way. Anyway.
I'm talking about the Nuggets.
Oh, true.
Right.
Fair. Touche.
Right. State of the markets. We ready? JC's ready. I know he's chomping at the bit.
Come on.
He's ready.
All right, everybody. This is State of the Markets with your boy JC. And the first chart that I want to look at is the market capitalization of Apple. I want to continue this conversation from yesterday. I was really thinking about it over the weekend. I'm like, man, this Apple's going to hit $5 trillion in market cap. And, you know, I'm throwing it out there. I don't know what's going to happen. I have no idea. And I'm throwing it out there. And, man, the pushback that I'm getting from people talking about how, you know, technical analysis bros don't know about PE ratios and the CAGR and all this stuff. And I'm like, dude, and how price is not trustworthy. That's what they told me. I'm like, don't you understand? Like, by definition, price is the only thing that we could trust. Like, price is the only truth. It's the only fact. Everything else is possibly true, right? The CEO may be telling you the truth, probably lying or wrong, right? Maybe be telling you the truth. Maybe he's right, but probably not. These sell-side analysts, like, they're just guessing, obviously. The economists, who knows what they're looking at? Price is the only thing that actually pays anybody. So that's why we focus on price, not because we're technical analysis bros that don't know anything about PE ratios. Not that we don't know, it's that we don't care. Because why on earth would we dilute something as pure and factual as price with something as arbitrary as earnings, right? So throw up the next chart just to kind of put things in perspective here on the old Apple. This is the actual price chart with the market capitalizations overlaid on top of it, because, you know, they're doing a lot of buybacks and things like that, so they don't exactly look the same. What I see is a move in about 20 months it took or so to go from 1 trillion to nearly 3 trillion in less than 2 years. So after a consolidation going back, what are we talking, 18 months of consolidating? Asset prices trend. So consolidations historically tend to resolve in the direction of the underlying trend. In case you didn't get the memo, the long-term trend in Apple is up, obviously. So there's a much higher probability outcome that the resolution is going to be higher. So a breakout above 180, you know, I think takes us to 5 trillion. I mean, if we got from 1 to 3, you know, in 20 months, why can't we go from 3 to 5 very quickly? You know, it doesn't have to triple. It just needs to go up 70% or so, right? From 180 to get to 5 trillion. So it's less of a move. It doesn't have to triple. So I think that this is just very would be very normal. And when you think about the weightings that these stocks, Apple and others, have on the NASDAQ 100 and the S&P 500, you know, it could really be one of the major drivers to take the S&P to 5,000, 6,000, Dow 50,000. Like these are the numbers that we're talking about in a bull market. And the fact that these indexes continue to make new 52-week highs every day, and people keep telling me that we're in a bear market, leads me to believe that things are really just getting going. Here's the Fibonacci extensions, by the way. But if you go to allstarcharts.com/Fibonacci, you could download our primer on these levels. But as you can see, the market really respects these levels. Let me ask you this, Spencer. Is somebody, I would argue maybe JC is a little bit more Fibonacci oriented than Spencer. Do you have any specific questions on these levels? Are you surprised at just how consistent the market respects these levels, or is this not surprising to you at this point?
No, at this point, I've accepted that the levels are just magic and they work. I don't know why, but they do. Although that whole chart of the market cap was interesting. Who suggested that yesterday? I'm trying to think.
Are you trying to give yourself a little credit?
That was me. That was me. Okay, I'm just trying to.
So which one do you like? The one that's just pure market cap, or the price with the market caps overlaid? I thought you liked that one, right?
Yeah. I like them both, but no, you asked yesterday how fast until Apple to 5 trillion, and I said, how fast did it go from 1 to 2? And that was a good chart. So thank you for that.
You are very welcome.
I didn't know the answer, honestly. So that was
18 months. It went from 1 to 3, bro. 18 months. So why can't we go from 3 to 5? Like that's not even like that much. All right, go to the next chart.
You know what you call this, JC? This is called bull market math, right?
This is bull market math. Strazza wears his bull market shirts. These are the types of things. We have more parties. By the way, I got invited to a party tomorrow and another party on Friday. So you see how the parties are becoming more frequent? Like these are bull market behavior, right? So one of the things that we were talking about off air, and something that I find myself conversing with people quite often lately, is the fact that the equally weighted S&P 500 is dramatically underperforming the cap-weighted S&P 500. But that doesn't mean that there's weakening breadth. That just means that tech and growth is outperforming. So here we're looking at the market bottom last June through the end of the year, right? So essentially the back half of last year, where technology and growth were the underperformers. Communications was negative during that period. Consumer discretionaries was negative. Technology was essentially flat during the first 6 months of this bull market, which was the back half of last year. And as you could see, the equally weighted S&P 500 was up almost 10% when the cap-weighted S&P 500 was only up about half of that, right? And the reason is because everything was working in the back half of last year except for tech and growth. So it's not that there was good breath or bad breath in the back half of last year. There was great breath. It's just that tech and growth was underperforming. So the equally weighted index is going to outperform. Now, this year, it's been the exact opposite. We've gotten sector rotation. Speaking of bull market characteristics, Mr. Strazza, but we got that sector rotation. The laggards, caught up and essentially became the new leaders. So what happens to the equally weight versus cap-weighted indexes? Well, the equally weighted indexes, the cap-weighted indexes, which have a ton of tech and growth, are outperforming because tech and growth is the outperformer. So equally weighted versus cap weighted does not mean market breadth. It's more of a function of which sectors are the leadership groups. And then finally, let's just circle back on the small caps. Just to reiterate that we have been buying this dip in small caps. I continue to like it a lot. If we are above that 170, we want to be long. And yesterday at All Star Charts, we published our minor leaguers report. Go ahead and put that up, the scan. These are the strongest small caps sorted by relative strength. And we changed the rule. So this is not like the Russell 2000 where it's about 300 million to 2 billion in market cap. In this case, we are looking at stocks that are 1 billion to 4 billion. To us, that represents small caps much better. It's across industry groups and sectors. So it's not specific to growth stocks or specific to individual sectors. We open it up for everybody. So it could be financials, it could be precious metal stocks, it could be anything that fit the parameters of that market capitalization and the relative strength, of course. And an interesting industrial name, we've been buying industrials. This is Arcosa. Throw up the ACA. We've been buying industrial stocks. We bought Caterpillar last week. Yesterday, we were looking at the railroads. If you're going to get rotation into some of these underperforming areas, some of the more value-oriented areas, as the interest rates continue to creep up, this seems like a good idea right here. ACA, if the stock is above, what's the level? Let's call it 68.5. That's probably a good level. If we're above 68.5, I like this one long. Target up near 84, showing relative strength. If we're below 68.5, leave it alone. But if we get that rotation into small caps and industrials, like I think we do, this one gives you the best of both worlds. So I like it. How'd I do?
That was great. It was interesting about the minor leaguers yesterday. Pretty much all those stocks were transportation names. Like all mid-cap transports, pretty much. I don't know if like technically infrastructure related products and solutions for construction transportation markets is Arcosa. The other one is infrastructure and related equipment for transporting goods and people, like an aviation company. And then Vera Mobility, smart mobility technology.
So you're seeing the industrial stocks pop up. You know what's interesting about the small caps?
I was surprised by that.
What's interesting about the small caps and the minor leaguers, as we call them, is that, you know, the correlations between themselves and the overall market is going to be less positive than these large caps that are really being driven, you know, by the overall market. You know, the relative strength is really going to stand out more in the small caps. I really like that. So just because industrials are underperforming and have been this year doesn't mean that there aren't small cap industrials that are outperforming, right? You know what I mean?
So you know that I agree with you when it comes to the equal weight versus, you know, cap weighted and biggest players dragging up the market. We're going to have a great conversation about this on Thursday for anybody who's interested. As you know, Todd Stone, I'm very excited, one of our, you know, good friends, and he's an excellent technician, but he's, you know, he's big on this theme. So we're going to talk more about it, but it's not a bad thing. And it's actually not that unusual either, right?
No, at all. It doesn't. You know, earlier in my career when I was dumb and ignorant and inexperienced, I thought that it did mean that there was like market deterioration, everything like that, and then I did some basic arithmetic and quickly realized that that doesn't mean that at all.
Well, I mean, you don't want the equal weight, you know, index to be moving lower while the cap weighted index is moving higher, but it can underperform.
Yeah, it's simply a function of which sectors are outperforming. It's just a leadership question, not a breadth question.
I was just trying to look up quickly what are some of the largest equal weighting ETFs by assets, and there's a couple with, you know, billions and billions. RSPs, the equal weight S&P fund, $32.5 billion in assets. I've never understood equal weight, honestly, like why it should work over the long term. Just, it doesn't make sense to me because by definition you would have to sell the winners and buy the losers to maintain the weighting. So
well, the cap weighted does the same thing, buys more of the winners and sells the losers. So you're going to get that function in both.
No, it does the opposite. The equal weighting sells the winners and buys the losers.
Oh, right. Sorry, you're right. You're right. Sorry. You're right. And no, this and you know, like Strazza and I were discussing off air. These are not vehicles that we're actually going to own.
Right.
I've never traded an equally weighted ETF ever. Have you, Strazza?
Well, no, I have not, and I won't. But
I mean, I probably won't ever.
It's important to keep in mind, like Spencer, if every vehicle that existed only existed because it was a good strategy, right, or was or slated to outperform, half the shit out there wouldn't exist, right?
That's true. That's
you know,
true.
Yeah. I don't think it matters that, you know, by definition, you're right. It's just math. It's gonna probably underperform.
Like Strazza, like the EQRR. This is the equities for rising rates ETF. You think we're ever going to buy this shit? We're never going to buy it, but it's a good index to track the types of stocks that do well in rising rate environments like financials and energy. It's just more of like a vehicle to analyze. It's not that we're going to go buy this obscure ETF, you know?
It's great information.
If anything, we'll look at the components and buy some of the components, right? Like you look at ARK. Like we're not going to buy ARK. We could, but I'd rather look at the components and look at some individual names within that, right?
Totally. Good information. We're lucky to have them. You want?
All right. What's up?
Can I say something? We're moving on.
No, go. Yeah.
But speaking of breath, just on that conversation, throw up slide 10 quick. I think yesterday we got a really big development in a sense that we're seeing these speculative growth indexes catch a really nice bid here, right? ARK took out these key AV WAPs, right? Seeing a lot of strength beneath the surface now and down the cap scale in tech and growth. So you are getting that really bullish expansion and participation. outside of just the big caps and the large cap tech names. And you could look at any one of these kind of speculative growth indexes and see that. But the ARC names had a big day yesterday. So things are moving in the right direction for market internals.
Continue to move in the right direction for the record.
That's right.
All right, let's do some earnings here. We got a couple big ones overnight, and I want to get to that right now. Here we go. Earnings spotlight time. All right, here's our calendar. You can see not a ton of reports this week, especially in the latter parts of the week, right? But we did have Zoom last night and Lowe's this morning. So let's talk about Zoom. Let's start with Zoom here. That was sort of the big one in the overnight session. EPS beat the estimate, $1.16 versus 99 cents. Sales also beat the estimate by a smidge. Their guidance came in above estimates for earnings per share and for revenue. That was for the fiscal year, and then in line for the current quarter guidance. So it was a good report. And the stock last I saw was up. But I haven't checked it in the last few minutes.
From 600 to 60. Look at this thing, huh?
What do you think? Is it worth the buy down here? Right? Do a little bottom fishing? I don't hate it.
You know where you're wrong. I would have rather got in on a really tactical trade when it took out these pivot lows here. It's kind of already moved a bit. How good is Fonz though? Look at this chart. It's the best.
And then if you add momentum, you got a bullish momentum divergence on RSI on the weekly. I don't hate this. Just understand that this is a different type of trade than buying leadership. You're really you're really digging deep into garbage at this point. But if we are above 62, you can even argue 64 if you really want to get more tactical. I don't hate it, Straz. I'm certainly not going to be short this name down here.
No,
at all, because I don't have a death wish. But man, I don't hate this name. It's not the highest probability of success in a name like this. That just like you said, 600 to 60. I mean, that tells the whole story right there. But I don't hate it. I'm definitely not going to be short. I don't have a position, but I don't mind a long here at all. I think 64 is a good level. Not even 62, 64.
The more that the market improves and internals improve, you definitely don't want to short something like this. We do know where we're wrong. It's really well defined. I'm seeing a lot of setups like this. Look at PayPal. Quick, pull up PayPal. This one's similar to, I was looking at it the other day. We're going to talk about it tomorrow. But you don't want to bet against these things here. Even the worst stocks like Zoom, PayPal's on that list, right? Wouldn't you buy a squeeze above those pivot lows in this thing?
In PayPal back above 68, 67?
All day I would be in that.
Yeah, but the fact that it broke and Zoom did not, I'd rather be in the Zoom. Both are low probability trades, but Zoom looks better, And by the way, just Zoom getting back to last summer's highs is a double.
I got to be completely honest. I'm not great when it comes to tech stocks and tech fundamentals at all. I miss these things, but I just don't understand, what business Zoom even has left at this point. I think it's a commodity product. Think about it. We use any video call service. We just, whatever link you send me, I don't care. Okay,
but you know what?
We've been using Google more lately.
It's funny you mentioned that, Strazza, because and Joe Weisenthal from Bloomberg highlighted this this morning on the conference call, on the earnings call last night. The analysts were peppering Zoom executives with one theme, and that was AI. There was half dozen questions about how Zoom is going to incorporate AI into their business on the conference call last night. So that's what the analysts care about right now, right? That's what Wall Street cares about right now.
What did they say? Did you hear any, how would they incorporate AI? It's a video. I don't.
Dude, yeah, of course they talk. All these calls are the same, and they talk in vagarities, right? And nothing specific ever gets said, right? And the questions themselves are a mouthful to even just understand, right? Because these analysts ask the most obtuse questions possible. But it was just a funny highlight that that's clearly where Wall Street's focus is right now is AI.
The AI bubble is not in asset prices. It's in this sentiment right? This idea that every single company is going to be like radically transformed by AI. I'm not saying they all won't use it in some, way, shape, or form in the future, but I mean, we're talking about it a lot for companies that it doesn't even make too much sense for, in a lot of cases too.
I thought this was a great tweet. If you want to throw up slide 2 there, Spencer. I thought this was pretty hilarious. This one coming from Ivan the K.
Oh yeah.
Let me know when that's up. I thought it was pretty hilarious. So this tweet coming from Ivan the K. Today I'm launching an inflation-protected, blockchain-powered, artificial intelligence-designed, ESG-compliant metaverse spec. I'm hoping it will become a meme stock. I thought that was pretty funny. Like all the words. I mean, that was pretty obnoxious and hilarious. Shout out Ivan the K.
Because that's a big theme too. JC, you look at the new ETF launches, the inflation protected stuff last year was like there was a bull market with those new fund launches for sure. That's funny.
Yep.
I actually might have believed that tweet if it was a year and a half ago because of the SPAC.
Oh, you got to take this stuff seriously, man.
Yeah, right.
Yeah.
There was
like he was kidding, but like somebody else is reading that, be like, I should start that.
Casey, you remember it. There was a moment in 2021 where I would wake up and read crypto news and I wouldn't know what was real anymore. Did you guys remember the headlines with these altcoins and these cryptos back in 21?
Yeah, it was pretty
metaverse and people buying mansions in the metaverse.
True.
It was a wild time, man. All right, let's move on here. We got Frank Cappelleri in a couple minutes. Let's talk about Lowe's here. Lowe's Home Improvement. EPS came in above estimates, $3.67 versus a $3.45 estimate.
Nice.
With sales, it was a year-over-year sales decline, but the street was expecting that, so their sales actually beat the estimates there. They did lower the revenue outlook for the year by a couple $2 billion. And they lowered their EPS guidance for the year as well.
So yeah, let's just talk about the guidance right now, right? You're hearing all this stuff about a earnings recession. And first of all, earnings recession is all you're hearing about in the news, and how earnings are coming down. We're coming off very high levels from the past few years.
I thought a recession was a description of GDP. What does the earnings have to do with that?
Huh?
I thought recessions were 2 consecutive quarters of GDP.
It's a different thing. So in earnings recession,
they changed the rules?
No. There's a recession, which is the economy, and then there's an earnings recession, which is looking at like companies in the S&P 500.
I think they're just making shit up at this point.
Right. It means that earnings will be down this quarter, right? Year over year. That's really what they mean when they say earnings recession. Maybe it's 2 quarters in a row. Anyway, that's the narrative. Yet when I come to my desk and look at these charts every day that are reporting earnings, they're resolving higher from bases, and earnings are the catalyst for it, right? So don't listen to the news. Second of all, it's all priced in because the guidance has been bad in the majority of these names. And when I look at the charts, prices aren't falling, right? So it's always the reaction. JC, you talk a lot about this, and not exactly what the news is. It's how the stock reacts to it, right? Because you don't know what's already priced in. So,
yeah, I don't care what the news is. Like, I don't care what unemployment comes in or what the FOMC says or what the earnings projections are. I care about what the market thinks about that, right? That's what I'm most interested in. So, and what are we going to do about this stock? I don't think there's really anything to do here. Still in this range. If we can start creeping above 222, start getting back above last year's highs, then we can look for a trade for a retest of the all-time highs there, the late 2021, early 2022 highs. But right now, it's just a sideways mess. I think you leave it alone. If I got to talk to Sean about some of the implied volatility. Sean coming on later today?
No.
Sean's coming in later this week.
He was traveling. He'll be back on Thursday. I think.
Perfect. And if he was here, I'd ask him in later today when I talk to him. I'm going to ask him about this because to me, this looks like a good candidate to sell the wings. And if you're getting paid enough, and implied volatility is high enough, you could sell some out of the money calls, some out of the money puts, betting that we're going to continue to churn sideways. I'll talk to Sean about that. If there's enough juice built in there might not be because they just reported their earnings. So you're going to get that premium contraction now post earnings. So might be a little too late for that. But now you also don't have the catalyst. So I don't know. I'll talk to Sean about it. But that's sort of when I look at this, that's the first thing that comes to my mind. Are we going to get paid enough to sell the wings? How far out do we need to go? And that's my question. And he might be, we're not getting anything. It's not worth it. Or, we actually are getting, right? That's the conversation that I would have with Sean. But in terms of directional bets here, I think the bet is a lack of directional bet.
So in the press release and on the call, the CEO of Lowe's really blamed three factors, right, for the drop in sales. And I'll let you. I'll give you guys two.
Yes,
And I'll let you guess the third. Okay, it was lumber deflation was one, lower DIY discretionary sales, and what do you think? It's everyone's favorite scapegoat.
Shrinkage.
What do you think was the third? No, it was unfavorable weather. The weather.
What does that even mean?
I don't know. The weather.
Yeah, sure.
Yeah.
I'm looking at all these charts. Throw up slide 24 for me because we're talking about a lot of retail, right? We just got through like retail earnings week. Whether it's Lowe's, Home Depot, Walmart, Target, they're all lowering guidance, yet the charts are holding. I would look at the index. No, that's not it. 24. Maybe refresh it. I just dropped it in. The retail chart, XRT.
Yeah, it's 24.
Index needs to hold. This thing doesn't look great, JC. I mean, this looks a lot worse than most things these days.
By the way, this is an equally weighted retail ETF.
It sure is. But RTH doesn't.
Spencer's head's exploding right now. He's like,
I knew that.
All
right. RTH doesn't look much better. The Van Eck retail ETF. It does look better, but
Yeah, because the RTH, which is the cap weighted, you're looking at 21% Amazon, 10% Home Depot, 8% Walmart, 7% Costco, 5% Lowe's, TJX is 4%. So you got some leaders there as opposed to the equally weighted index that, these Bed Bath and Beyonds and, all these shitty retailers that should have gone out of business years ago are carrying that down, right? Because there's a lot of retailers that they just suck. Like they shouldn't be around anymore. Like my wife is all excited because Bye Bye Baby's shutting down. So they have like some crazy sale. Bye Bye Baby's owned by Bed Bath and Beyond. So for those of you who don't have kids, may have not heard of Bye Bye Baby, but mothers love it. My wife certainly does.
That's an actual brick and mortar store. I thought it was a website.
It's Bye Bye Baby.
It's
nice knowing you.
It's been a store. It's not going to be a wonderful moment.
One more.
It's in there with Blockbuster Video at this point.
Let's do Dick's. Let's talk about Dick's. Let's stick on this retail thing.
Yeah, I was going to go there. Dick's Sporting Goods reporting earnings per share of $3.40 versus a $3.18 estimate. So they beat that. Sales came in higher as well, 2.84 versus $2.8 billion. They also reaffirmed their outlook for the year. Their EPS range, call it mid $13 range for fiscal year EPS.
So this is maybe the most concerning one, right? And I'll tell you why. That all sounds good, right? Even the guide. Did you just read the guide? Sorry,
a reaffirmation of their fiscal year. Good.
Fine, it was in line, right? Yeah.
So
here's the CEO. Our Q1 sales grew 5.3%. Strong comps, healthy transaction growth. We delivered another strong double-digit EBIT margin. Remained confident in our ability to drive sales and profitability growth in 2023. This company is doing everything right. This is one of the leaders in the space. We wrote about this stock just recently. It looked like it was going to break out of the space. Like, what a nice chart, right? Those would be new all-time highs. But it's failing and pulling back on this report. And what's the price action this morning following this? So it was pulling back, running into this report, catching a little bid this morning. But there's a lot of work to get done here, and earnings isn't going to be the catalyst to break this thing out. I mean, we're trading up 2-3%. This
needs time. Listen, it's below this 150 level. Those were the highs from a couple of years ago, 18 months ago. We're still below that level. Still have work to do. We got up there for the first time since those highs, and we failed. That shouldn't be surprising. Give it time. If ultimately, and I think. Ultimately, maybe we do break out above those levels and we'll be buyers. But in the meantime, there's really nothing to do there. We're stuck below overhead supply. Leave it alone.
Listen, it's not the end of the world. You're right. But I like to see the leaders lead. I like to see earnings be a catalyst for breakouts. This is a nice base. You're seeing other bases resolve higher on earnings in other groups. I just don't love the price action in retail right now. I think there are better ponds to fish in for sure.
This thing doubled off the lows last summer. Give it a rest. Let it chill out for a little bit.
These things aren't breaking out.
It doubled off the low. Doubled 100% return off the lows last summer. In less than a year, it doubled. Let it dance, man. Leave it alone.
I'm buying stocks in industry groups that are rocking. You just saw that retail chart. Enough said.
Yeah, fine. Yeah, fine. Well-deserved consolidation here for Dick's.
For Dick's. Yeah.
Yes.
All right. It's 9 o'clock. Let's bring on our first guest of the day, Frank Cappelleri, founder of CappThesis. He's got some great research, got some great charts, and he's here with us now. So let's get him on the show.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is.
Frank.
What up, Frank?
Hey guys, how are you?
No.
You made it on. You figured out the audio.
Yes, can you see the sweat coming down my face, just in case?
Strazza knows about sweat.
Yeah.
Strazza is our chief sweat officer over here.
I'm the sweatiest.
Yeah.
No, but I told Frank like how official this is. I told him we have a little green room. Spencer will take care of you. So
Oh yeah, looks like a charm.
Drink a little
first of all,
coffee in the
guys,
green room, right? Get yourself some water. Get yourself,
That's right.
unsweaty.
Still waiting for the makeup though.
Are you nervous? 'Cause this is a big deal. I don't know if you're nervous.
Frank, I don't know if you've heard. This is the best morning show in finance.
I've heard.
Yeah.
Well, no, all kidding aside, guys, congratulations.
kidding?
Best of
Nobody's
luck
kidding.
with everything. It's awesome. A good start so far, and yeah, I love the interaction between all your viewers, and can't wait to see what this does in the next few months to years.
Yeah. The chat is one of my favorite parts. Everybody, you're going to see more of Frank's face. This is so awesome, too, because we launched this new show, and then we're also having on all of our best friends and mentors and idols. So this is just the past week has been awesome. So
Yeah, without a doubt.
great.
All right,
to
so
see
you guys can get a room later. In the meantime, Frank, talk to me. What's on your mind, buddy? Talk to me.
Yeah, well, you know what? I look at the S&P 500 a lot, clearly, and I do a few pieces at CappThesis, and in the morning trends piece, it's a strategy piece usually, so we talk about all different aspects of the S&P, and so today we did a deep dive on a few things, and I think one aspect that keeps on popping out, which I don't think a lot of people talk about that much, is that, think about the differences between this year and last year. And one of the big things that really didn't change until the first quarter was that you had an overwhelming amount of big 1% moves in the S&P 500, right, throughout the whole year. So last year, we had 130 of those, right, 60 or just about 130, and we're just about even, right, about 65 each in both the plus side and downside. And guys, as we know, the biggest moves occur in bear markets, right? It's easy to say, but you really get pulled in to that, exuberance sometimes when you have a huge pop there, right? Any day, and even so when you have like bear market rallies. And so even though we know the VIX didn't really capitulate last year, people were expecting it to, rip up to, 50, 60, 70, whatever. I kept on going back to this because the VIX really, I think it falls down in a lot of ways. One of the things is that it does not capture two-way volatility, right? Big up day doesn't factor into it, where to me, that's just as important, just as telling at least, as a big down day. And so what I found very instructive is just to track all of these on a monthly basis, as you can see on the chart right there, where what's really was striking is that, as you saw, we had around 10 or so per month all the way through last year, which continued in January, February, and March. And then at a dime, just fell off a cliff in April and in May. As you can see so far in May, we only had 3 1% moves on an absolute basis and 3 all in April. And we think about what that time was, of course, we're still like 2 weeks out of the regional bank explosion as things started in April. And the market was really just able to, I'm going to say ignore it, but understand maybe it's an isolated incident at this point.
Frank, you can say it. It ignored it.
Yeah, I know your thoughts are. But I think that's telling, right? Because, the market sees something that should have made a big dent in the comeback story. And it did, obviously, for a few days there. But then the rest of the market was able to jumpstart itself. So again, when you're thinking about what this can lead into, right? Bear market, a lot of volatility, which then, of course, turns into a comeback story with a lot of foundational bases being built. And for that then to mature into an extended uptrend, you need to have some other things happen, where key characteristics of that is, again, continued smaller moves, which comes with lower volatility, which comes with lower volume as well. And you can see how that can work out, because if you look back to the longest and most steady uptrends we've had over the past number of years, right? 2021, 19, 17, 13, all this same type of action.
Great years, Frank. Great years. Great parties in those years.
2017 was crazy, right?
Yeah.
With, no volatility.
Yeah. Remember the meme on Twitter every day was how many days it had been since the S&P dropped 1%. Like, that was the annoying daily meme. And if that's the annoying daily meme, that's that tells you a lot about the environment.
That's exactly right. And that was historic on the other side of the coin. But you don't need just 1% move every 5 weeks or whatever it was back then. But I think you still need to see this continue. And again, we know things can change on a dime, right? But just tracking this type of thing, over the course of a few weeks to over the months, you get to see, and not surprisingly, when we see those smaller moves, price action is more trustworthy, and breakouts start to work again, which is, of course, has been having so far.
And the correlation's dropping as well, Frank, right? So you talk about volatility dropping, you're talking about 1% moves disappearing, correlations falling as well, characteristic of bull markets, healthy environments, right?
Yeah, that's right. You want to see as many things as possible. But I think the other part of that, I know you guys talked about this a lot with breadth. People have got very hung up about large cap coming back so much and leading. But if you go back over time, that can tend to happen for a while. And one of the key ratios I like to look at is the NDX versus the NDXE, right? Just to show how things are progressing. And we know that the large cap is doing better. But one of the things is that for a long time, some of the equal weighted areas haven't been doing as well, but sometimes they lead the large cap, right? So this is just the NDX looking at NDXE and also the advanced decline line for the NDX down there. So to me, the equal weighted NDX doesn't look that bad, right? No. It hasn't broken out yet, but it looks like a bullish pattern you would try to look for, right? And I think that's one thing that to consider. Again, talking about correlation, that's one thing. The other part is that, another thing we've started to hear about is how so many of the names underneath the surface, like the smaller NASDAQ names, aren't doing well, right? And the NASDAQ advanced decline line making new lows, right? Heard that a lot. And I'm sure you guys saw I put one of those long-term charts on Twitter.
It peaked the day it launched.
Yeah, right. Look at that. So I think that they got a lot of feedback, good and bad. But I think the point is that, you have a lot of names that typically don't do well anyway, moving lower. So you can't use this as a metric. In fact,
Frank, think about what's in the NASDAQ. The NASDAQ composite has a lot of just crap in it, right? Like there's a lot of junk in there. And the advanced decline line shows that, no? Let's remember Frank, what it is.
Frank, just explain the chart. Explain what happened here. What's going on with this red line? Like what a disaster. Just explain it for me.
Well, it's just a cumulative advanced decline line for the NASDAQ. And it goes back as far as we can, right? About 50 years or so. And it just shows you that in any given day, right? Take the advances minus the declines, and this is what you get. So over the course of 50 years, it's been much worse than it has been better. Whereas if you look at this, if you were just thinking it's the inverse of the NDX or the NASDAQ there. It's almost like an inverse ETF look, right? But I think another part of this is that you guys may have the short-term version of this as well, where I think it's more important to recognize times when this advanced decline line actually rises and does so at an expedited clip, because that tells you, JC, like you just said, the junk is leading, right? And that really kind of happened some of the bear market rallies we've seen over the last year and a half or so, where the likes of ARK and other things start to really rip higher. And that's when it tells us that you are now extended on a short term with everything, and you can probably expect a pullback, not because large cap is leading and nothing else is following along. I think that could be a sign of strength, actually.
I wish we had more to disagree on. JC was making a similar point about this just at the top of the show. When you look beneath the surface, how much weight do you give to just looking through individual stock charts and assessing breadth that way? Is that something you do?
Oh, without a doubt. I mean, I see you guys do the same thing. I usually start with the S&P 500, go through each one, and just make it a very old school, ledger on a piece of paper.
Right.
So positive, negative, and they give you all you need. Not all you need to know, but if you're thinking about the S&P, right? That gives you an idea of really what's going on.
And there's nothing wrong with quantifying the data and being like, oh, percentage of stocks above their 200-day, percentage of stocks above their 50-day, advanced decline line, new highs list, 1 month highs, 3 month highs, 6 month highs, 12 month highs. All that stuff is great. And I think are a great complement to what you just alluded to, going chart by chart by chart. But that's all it is. It's a great compliment. And by the way, any idiot could just punch up that data. It takes 2 seconds to do it, right? Like anybody could do that. Yeah. But only the true gangsters are going to go chart by chart by chart, listening to some music, and you start to pick up on themes like, I keep seeing these like rounding bottoms keep showing up that started in the first half of 22 and are now completing. And more and more of them keep resolving to the upside. They're not resolving to the downside. And now we're seeing rotation it's impossible to quantify that data in just a breadth chart if you're not going one by one and just noticing it using just kind of common sense. And at the end of the day, it doesn't take that long.
And it gives you an indication of where the indexes are going too, right? Like all year we've been looking beneath the surface and saying, we want to be buying the charts that look like this. And they were just, these beautiful rounding bottom patterns, these nice reversals. And we're buying the ones that were completing higher. Now the NASDAQ looks just like that. Now the S&P looks just like that, right? And when I look for like confirmation, Frank, for these NASDAQ new highs last week, when you look beneath the surface, I think earnings was a catalyst for a lot of it, but did you see breadth expansion in the components or contraction?
Well, last week, especially for the S&P.
Yeah.
Go ahead, Steve.
Yeah, throw up like the HP chart and some of these bases that Frank sent us, Garmin, HP. Yeah. This is what I'm seeing beneath the surface. A lot of this.
Yep. Right. And that's what, and I think that this is a key difference, right? Because so many times you've heard, well, HP or fill in any stock ticker there is net flat since whenever, right? July, August last year. But, it looks much different. And there's no way anyone who looks at charts this way would say that it was just as attractive back when it was gapping below 91 or whatever, 31 in September as it is now, right? And so, yeah, you missed the low, right? I don't make a living of picking bottoms too much. I don't know about you guys, but you always want to say that you want to pick the correct time, not the low, right? About this. And then, at the very least, you have a frame of reference here. You see where the resistance is, and you can at least manage risk on a breakout attempt that fails, as opposed to just trying to think that, it's oversold enough and is going in, after it falls so far for so long, it should rally, right? You need some sort of evidence to suggest that maybe, time has passed enough as well, the foundation built, and you can respect the breakout attempt now.
And getting back to what I was talking about before, like this pattern that you're seeing, we're seeing across the market. We keep seeing it again and again and again in individual stocks and ETFs, sector ETFs for that matter, and industry group ETFs for that matter. And are more and more of these resolving higher, or are they failing, or are they breaking down? More and more are resolving higher.
So I think the question really becomes this, right? There's so many of these beautiful bases, like you said, Frank, these basing patterns are like launch pads, right? What do you look for in terms of like bullish characteristics? We can't buy all these bases. I would have 100 stocks in my portfolio right now, right? So like, what do you look for in terms of bullish characteristics? I know you said something about like Google's overbought rating recently. Like, how do you differentiate a really good base from just an okay base? Which ones do we really want to buy?
Yeah, I think just looking at it, you can tell, right? I would think that the ones that are more tightly wound, right, are to give a higher percentage of a chance of working. That's what I look for, at least. Whereas, like you just brought up Alphabet, and it's had an amazing run. Now, another part of that conversation is that for the longest time that had been lagging, right? The comm services area, where if you look at Meta and the XLC ETF, they look very similar. Where Alphabet has lagged, now obviously rallying. So just to touch on that chart for 1 second, Steve, is that, we came into, after yesterday, has a 14-day RSI of 80, which is extremely high, especially for Alphabet. But again, you go back in time, I think it's very interesting. You have to really zoom out, right, to see some of these things. And you look back at the last number of times it happened, not counting, of course, the COVID high, because everything crashed after that. But during that advance, right, from 15 all the way to 18, you had 4 different times when the RSI hit 80. Of course, we know that condition can't last, and probably a short-term pullback occurred. But look at that uptrend, right? It continued the whole time, right? So that's the type of thing which again could be the next step where you have something like Alphabet that has a huge run off the bottom, has a very now stressed RSI reading, but it could just have now created a cushion in which to drop back down to create a higher low. And that's the type of another, type of scenario you want to look for when you have a breakout that's already basically hit its target at this point.
But Frank, I can't buy the stock because it's overbought. It's like, how can an overwhelming amount of buying pressure possibly be a bad thing? Is how I look at it. Quickly, before the fun police kicks out Frank. Frank, can we talk about sector rotation? The back half of last year, everything was working except for tech and growth. Everything.
Yep.
Hence why the equally weighted S&P 500 was dramatically outperforming the cap weighted S&P because it's dominated by tech and growth. And now this year, it's the exact opposite, right? You got that rotation into the last areas that were not working. And you got that this year. The leaders are tech, discretionary, communications, right? So if this is a bull market, sector rotation is the lifeblood of those bull markets. Do we now get that rotation back into industrials, maybe some financials, small caps, maybe materials, maybe energy catches a bid? As interest rates are creeping up a little bit, quietly creeping up,
Yep.
I feel like nobody's talking about it. Does it make logical sense for that to be the next rotation? And you bet on those caterpillars, on those railroads, on those industrials, maybe some banks that are holding up better, or do you stick with the leaders, right? That's sort of the dilemma, right? I'd love
Yep.
to hear your thoughts on that.
Yeah, I agree with that. I mean, I think we'll see it right in the chart patterns if they start looking like that more. The other part of it, I think the concern is, of course, that when capital comes out of the bigger names, that just causes liquidity issue, right? That's the biggest concern. Whereas it's just a number of stocks is rotating out of it, like you said. You just have to, the hope, of course, is that people don't get overly concerned and be forced to sell, and that cause a cascade effect, right? But I think we'll have to, look at that time if and when it comes.
If you're buying one of these non-growth sectors, which is it?
Well, I want it to be the industrials just because it has so many names in it, right? But I think you see, if I look through those charts, you'll see some doing a little bit better, some not yet. So I think that still has some more to go.
And you're saying, just to be clear, you're saying you want it to be industrials because of the impact that industrial leadership would have on the overall market, and
it
you
does.
want the market to go higher.
That's right. So it has it has the most stocks in the S&P right now, not the biggest weight, but the most stocks after the rebalancing.
And so diversified. There's so much different stuff in there.
Exactly.
All right. Frank Cappelleri runs CappThesis. I just dropped the link in the chat. It's also in the description. Frank, thanks for coming on today.
Thanks so much, guys. Looking forward to next time.
You're the man, Frank. Looking good, buddy.
You too.
All right, let's bring on Kimmy Sokoloff, find out what's on Kimmy's watch list before she has to hop into her trading room. And you know what? I'm not going to play the bumper because we have a new one, and I don't know if this is the new one or the old one.
Play it.
So
play it.
All right,
Mystery
maybe
bumper.
Let's do it live.
Mystery bumper.
it was the new
That's
one.
the Kimmy I know. That's the one we love right there.
Oh my God. I'm
That
like,
other
oh
one was
no.
so serious. It's like, Kimmy all serious. I'm like, who is that? That's not her.
Oh my
That's
God.
it. Great work.
Great work. Shout out Izzy.
Shout out Izzy. All right, Kimmy, what's on your mind today?
Yeah, I'm watching. So yesterday in the room, I recommended DocuSign, one of the trades we did one of the recommendations. I recommended it like 54.40 or so for potential move up to the 200-day around 55.20. Now I'm going to see how it handles it and see if it holds the 50, it hasn't been above the 200-day in a while. So this is what you see. Sometimes it fails. Sometimes it takes a little time underneath the 200-day, through a moving average. Sometimes it dances around there, either breaks through or it doesn't. So I'm going to watch, see how it handles the 55.20 area, 22 area, and see if it pushes through and heads to, like 56.80 or so. So we'll see how that goes. I have other names on my list, but that's just one of them.
You like buying this pullback on the on market slightly down today, or you're going with the fade?
I'm going with what?
Like, are you fading this market? Like, it's down, market's down a little bit pre-market.
Yes.
Are you going with that? Are you looking to buy this dip, or are you long and short?
Long and short, I have to see how the market trades. You know, news could come out either way. I know the negotiations, everyone keeps talking about it. You know, if it passes, I don't know if the market will rip. Maybe we close the gap up to 420, 120 or so on the SPYs, you know, or we head back down, you know. So it's kind of like a give and take. I tell the traders, you know, keep your stops in because it could get volatile if news comes out. You could get stopped or a position go against you. You know, just I'm like, put your order in and put your stop in quick.
So watching DocuSign here, that's front and center.
Yeah, I'm watching that. So far.
Kimmy, do you ever trade the funds or indexes? Like, will you trade something like ARK?
Yeah.
ARK? Oh yeah, I have traded ARK before.
And Qs and stuff like that. Yeah.
Oh yeah, I trade everything. Yesterday
Yeah.
we traded IWM. We had a nice like 80 cent, 70 cent move in it. It was great. It continued to go higher after that, but you know, sometimes I take my profit quick.
All right, I saw today that Kimmy has made 27 trades in the last week, and she's profitable on 24 of them. So very nice job,
Ridiculous.
Kimmy.
Oh, thanks. I haven't even looked. I try not to look. I don't want to jinx me.
Yeah,
Kimmy,
probably for the
crushing
best.
it. Crushing it, Kimmy.
Kimmy runs an exclusive room where she live trades the open every
Thank you,
single
guys.
day. If you want to join Kimmy's room, this is what you do. Email me right now. Email me questions at stockmarketmedia.com. Thanks a lot, Kimmy. I'll let you run in there. Email me at that email address on the screen, and we will look into getting you into Kimmy's room. She's there every day at the open and sometimes at the close too. Live trading. And as I said, 24 for her last 27. Is that good? I think that's good. That might be good.
Is that good? Like in Grandma's Boy, when he breaks the record, he's like, "New record? Is that good? Is that good?"
Wow, that was a deep cut. Wow.
I don't know.
You like that?
I don't know how she does it. Incredible. What a boss.
I'll tell you how she does it. Very simply, she's looking at Bollinger Bands, right, on a daily time frame. And when the stock, you know, she's looking at about 100, 150 of the most liquid stocks. You know them all. Yep. You know, tech and energy across the board. When it's on the upper end of the Bollinger Band and stochastics, RSI, and MACD are overbought, she's looking to fade it for a mean reversion. And when the stock is at the bottom of the Bollinger Band, the lower band, and it's oversold on RSI, stochastics, and MACD, she's looking to buy it for a mean reversion tight stops. I mean, it's nothing like crazy. It's a very simple, old school strategy, not reinventing the wheel. And it works. And the best part is her hit rate's off the charts, which is ridiculous. But the risk is always so well defined, right?
Yep, that's awesome. So mean reversion. It's crazy too because you know we're using the same tools, but in very different ways, right? Like we use momentum with the trend. She uses it against it, and you really can. Like you know, markets are fractal, so that's awesome.
Yep.
All right, Strazza, I know you had some things you wanted to discuss for the hot corner, right?
Yeah, let's do it.
All right, let's do it.
Feeling hot.
So hot right now.
I love that. So hot.
All right, let's get this thing up here. So two really stood out today. Let's go in order here. ProFrac Holding Corp. So this is Dan Wilkes. Him and his brother were the co-founders of this company. They also sold another fracker, you know, years back. So these are big oil guys, titans of industry, if you will. So $6 million always stands out. He's a very important person. Obviously knows as much about the company as probably anyone as a founder. So these are really the kinds of transactions we're looking for. What we do, right, after we see the filing is we go to the chart. This industry is really hot right now, and this one's not, right? So this goes back to, you know, JC, you always ask this question to guests and me and the other analysts and the team. And it's great because it's such a tough one, right? Do you buy the weak ones or the laggards hoping for some sort of a catch-up trade, or do you buy the leaders, right? You were just asking that about cyclicals, right? With this, you know, it's cute that it comes down to that question with this name, ACDC here. What a cool ticker, by the way, right? So you got the momentum divergence in place. Maybe you could define your risk up here in the low teens. You know, you got those lows from summer of 2022 and bet on a squeeze. It is in a really strong industry group, right? Like within energy right now, everything's kind of struggling. And then you have the offshore, you know, the fracking companies, which are really strong still. If you look at like something like Rig or Weatherford, right? That's where the strength is. So I thought that was interesting. I love to see the insider activity, you know, from.
And then hold on, $6 million. That's not nothing.
Yeah, it's a lot. But listen, this guy's a billionaire. This guy's a billionaire. I think he's worth like 1.5 billion. I looked it up this morning. But
it's a $2 billion stock. It's not that big. $6 million.
No, they just it's a brand new company. It's only, I think, several years old, 2018 or something, 2017. So anyway, this one really stood out, right? Let me just mention two, at least honorable mention here for General Motors, right? JC, you know why? Chief Financial Officer. Love to see it. $1 million. I mean, listen, that's a lot. A lot of money for anybody. He's coming out here in the open market. If GM doesn't break down, maybe this is this consolidation kind of fails and breaks higher. I don't know, but that's another one that stood out today.
What about the fact that, so you look at GM, when you look at the AC/DC or the GM, they're below overhead supply. Like, there's still work to do. So this is, I think, good examples of, listen, the CEO loves it, the CFO loves it. They're buying all this stock. It doesn't mean that it's for us, right? This is actually a good angle. I zoomed out a little bit more and it looks messy. Now that you look at it like that, it's actually a pretty good angle. I was looking at a monthly chart that might be a little bit too far out. This kind of looks like small caps, kind of looks like the Russell 2000, doesn't it?
Yeah, it does.
If there was ever a time that they're going to come in buying, this would be it. This is actually a pretty good angle. I actually hate it less than the longer term chart.
So, JC, you make a good point, right? That's what we see, and that's really what this list is, and what this product is like. When the buys are made, it tends to be on weakness. They're looking for value. They appear to be dumpster diving a lot, and then we wait a month or a quarter, and the chart will improve, and then we'll get the breakout we want, right? And the trend will turn higher, and we can get behind it, which is why we kind of leave them on our list. Rarely do we go out and see a filing and say, oh, we're buying this one too, right? There's typically a lag there because they tend to be buying weakness. Us as technicians, we prefer to buy strength.
I know you guys talk about how, we love to tell ourselves stories. I remember the story in GM a year ago was that it was actually GM that was going to be the EV leader, right? Because they can actually build cars.
Was that was real? People believed that?
Yeah, sure they did. GM shits out more cars in a week than Tesla makes in like a month or more, right? So, yes, that was the story a year ago in this stuff.
Yeah, I mean, Tesla's technology. Give me a break. That's gonna be
all
hard.
right. Okay, let's do quickly before the open some street moves here because there was a couple interesting ones I had today that I thought were notable. Talking street moves, analyst ratings, of course. JP Morgan out with a note this morning on some steel stocks. They are initiating at an underweight, or aka sell, Steel Dynamics and Nucor. And then also Cleveland Cliffs gets a neutral. So I guess they're least bearish that one. But NUE and STLD both at a sell rating or underweight rating today, JP Morgan.
And what and Cliffs was neutral from what? Do you know?
From nothing. It was initiation.
Oh, okay. All right.
Yeah.
What do you think, JC?
I mean, these things all kind of look the same. They had nice run-ups, last year, beginning of this year, and they're kind of like giving some of that back. They're a little messy. They're a little messy. I'm in wait and see mode. I appreciate JP Morgan opining on how they feel here. I don't necessarily care what they think. I'm going to kind of let price dictate our actions. And, I'm not too excited about any of these names. If you want to buy this pullback against, maybe the recent lows like STLD, if you want to be long against 95 or something, knock yourself out. CLF, if you want to be long, against 13, knock yourself out. Nucor, if you want to be long against like 130, knock yourself out. I mean, there are opportunities here if you're looking for opportunities in this space. I am not necessarily doing that. So I'll just sit back and watch.
Now, STLD and Nucor were really some of the leaders in this space, along with stuff like Reliance Steel. They don't look so great anymore, right? Really toppy. Like you said, I think patience pays here. I just flipped through more or less all the stocks in the industrial metals industry group. And JC, I got to tell you, there's not much to love here. You know which one really stands out as like by far the best looking chart? You're going to love this. Can you guess? We talked about it on the show, I think, a couple days ago.
Out of this group, which one?
We often argue about where they're actually from. Sigma Lithium.
Oh,
SGML.
the Brazilian lithium.
Whatever. Yeah. So that's a lithium company, right? So super niche. But that's within the industrial metals industry group. Looks far better than the rest. Tech looks good too. Tech Resources. Anyway, yeah.
SGML, headquartered in Sao Paulo, Brazil. I don't know if there's a Sao Paulo in Canada, but my understanding is that Sao Paulo is in Brazil, making this, by definition, a Brazilian lithium stock. I don't know why you give me so much shit about that.
I'm pretty sure it's Vancouver. It's like, there's reinsurance companies based in Bermuda too, but that doesn't mean that they're from there.
Well, they're there for like tax reasons and stuff like that, but if they're in Bermuda, they're not in New York. It is a Bermuda company. I don't know why that's.
No, they have like a PO box and then an office in New York is how that works.
Well, I don't see anything that has to do with Canada at all in but also like when you look at like Lind, right? Like this is the largest chemical stock in the world and it's British, but it's actually German, but most of their employees are in like Massachusetts or something. But it's a British stock headquartered in UK.
Michael Naus is going to come on next week?
We'll ask him.
He's the Canada guy, okay, and he's going to settle this once and for all. I won't say.
At the end of the day, to be clear, I don't give a shit whether it's a Brazilian or Canadian. Like, for the record, I don't care at all. I just want to be selling things higher than where I buy them. That's all I'm concerned with.
I'm on their company website. Sigma is a Canadian company that has been producing environment. Anyway. The jury's out.
Yeah. A question for you both. What kind of a company is Canadian Solar? Is that a Canadian company?
Definitely not Canadian. Yeah.
All right. Yeah. You could say it's a Chinese company. Okay. Anyway. What else was on my list here? Oh, you know what I want to talk about before we get Patrick from the chart report on the show is you guys do these amazing reports. JC mentioned one of them earlier. But last week, I think it was a Friday, you published the most recent Hall of Famers, and I wanted to bring that up here just because this stuff went out to subscribers last week, 4 days ago. So if you're a member of Wall Street Charts, you got this already. If you're not, you're seeing this for the first time.
Let me explain what this is, Spencer.
Yeah, go for it.
This is our big boys list, right? This is the big boys. We got the little guys list with like minor leaguers where we're looking at just small cap stocks and some mid caps, stuff like that. This is the 100 largest stocks, U.S. based, listed on U.S. exchanges, right? So all of the major players are on here from all sectors, and all we're doing is scanning for strength, right? We're looking for the leaders. Let the cream rise to the top. That's what this table is showing. When you look through it, just like most of our scans these days, JC, what is that theme? I see a lot of technology in the sector column. Communications, you got some healthcare mixed in up top. Kind of funny to see MasterCard in the top slot. But anyway, when we dig through, right, and we look chart by chart for the best setups, it's all these big cap tech names lately. So this week we highlighted advanced micro devices. Beautiful base. This is that pattern, right? It should be burned into everybody's brain by now. So beautiful base. We could buy this against those August highs in the low 100s. Meta, we want to keep riding the leaders, right? So outlining new levels for Meta. And then Netflix. And one thing that I just want to point out, right, about all these charts is look in the lower pane, right? We're not just looking for stocks that are breaking out of bullish chart patterns. We're looking for stocks that are leading the market, right? And are showing relative strength at the same time. And that's what that black line in the lower pane shows. And if you notice, there's nice basing patterns, nice reversal patterns in the relative trend in all of these names, not just the absolute trend. So what that tells us is we don't just expect price to move higher in absolute terms, but we also expect these stocks to continue to outperform, and generate that alpha for us.
Spencer, I got one. Spencer, throw up, go to slide number 2. I just dropped it in there. Throw that in there quick, slide number 2. This is Broadcom, just went out at new all-time highs And this morning, there's an announcement. My understanding from my fundamental associates is that they just announced a multi-billion-dollar deal with Apple. And this is a great example of the discounting mechanism already pricing in these news. Good news, quote unquote, positive news announcements tend to come in the direction of the underlying trend, right? In the same way, like if this chart was upside down, for example, and had been falling all these years and are pushing down against new lows, you would be seeing it breaking down to new lows on news that they lost an Apple deal, for example. And, the market would be pricing that in. So just a great example. And this one coming from the Hall of Famers is a monster name.
JC, some of these charts just look absolutely ridiculous. That Avago chart is incredible. I believe we're already long. I can check shortly. But this is what, take a look at NVIDIA. We're going to have to overlay those two charts, NVIDIA and Avago, because they look almost identical to me when I'm looking at them separately.
What is Avago? What are you talking about?
Broadcom Avago. I'm sorry. It used to be called Avago, just like you still
Wasn't it Avgo? It was actually called Avago?
Yes.
No, Strazza's right. It was Avago, and they merged and they kept the Avago ticker.
Yeah, it was relatively recent too. It
used to be BRCM, right? Broadcom.
I don't know.
Sure.
Yeah, whatever. Anyway, I think this is painting a nice picture of where NVIDIA can go, and we got those earnings this afternoon, right?
Oh wait, let me check the calendar.
We got NVIDIA earnings coming up.
We have NVIDIA. No, they're on third. Oh wait, yeah, Wednesday afternoon. Good call.
Okay, yeah. So big report after the bell here today.
Yeah, probably the biggest report of the week.
Yeah. NVIDIA could very well be looking like this Broadcom chart come tomorrow, right? So, some of these semiconductor names really strong out the gates again today. Overall market's lower, but some of these big tech names like AMD up nicely, Adobe up nicely. You got the Broadcom, NVIDIA's up into earnings. So, all right, see how this shakes out. We'll talk about the tape in 5-10 minutes.
Speaking of stocks that are moving, there's only really one mover this morning that caught my eye that's not earnings related, and I doubt you guys care about it, but it is Yelp, because WSJ reported that there's an activist in there looking to facilitate a deal, a sale, a merger.
Why would we not care about Yelp? Why would we not care? Why are you assuming that we don't care?
Because the stock has gone nowhere for how many years, and it's I don't know the market cap, but it's not what it once was. I'll tell you that.
Hey, all right, I don't have much to say about that.
Yeah, this thing's a mess, and Spencer, I take it back. You're right. I don't care.
But how about this Palantir, guys? If there's one base I'm looking to get into the rest of this week, Palantir is up another 5% today. I mean, JC, I know you don't like it. You think I'm biased. This stock is
nobody said I didn't like it. I was just reiterating that you are biased.
Hates Palantir.
I do not hate Palantir.
Look at this chart.
I read the book. What is it? 0 to 1. What is it? What's the book?
Peter Thiel's book? I don't know. I didn't read it.
I think it's called 0 to 1 or something, right?
All right. So you love Palantir.
I don't love or hate it. Like I like selling things higher than where I buy them. I currently do not own it. I obviously wish that I did. I'm glad that you own it. If you're happy, I mean, I don't have any issues with you making money. I'm glad you own it. Good for you. I wish I did. I don't.
Thanks. Do you like buying patterns that look like this?
This is what I do. This is what I do. I buy these kind of patterns.
So JC, you're at least very good at this. So let's talk about this comment in the chat right now. I loved Palantir, but now I hate Karp. I think you're alluding to the new CEO. He's a little bit eccentric, Alex Karp, right? Who's that? Nikki Boones? Who said that? RGB, right? Ignore all that. It's not about the person and whether you like his politics or his personality. If he's running the company well and the stock price is going up, don't worry about it.
Why? What's the story? Is he a hardcore Republican too, like Thiel?
I honestly don't know.
Probably.
I would imagine. Yeah. I don't know, but he's an interesting looking guy. He's on CNBC. He does a lot of media. He's out there.
Yeah. He's the most public thing about that company because he goes on TV once a month or so. All right. It is 9:40. We've not talked about the chart report today because I was saving that for our next guest.
Do we have a special guest today?
Patrick Dunuwila, editor of the chart report, is with us. He is up very early today.
His debut over in the morning show, the best morning show in finance. Patrick,
this is his debut. I think he's ready to go. Let's get him on the show right now.
All right, Pat.
What's up, buddy?
What's going on, fellas? How we doing? Good morning.
Live from beautiful San Diego. I like it.
I know. I got the whole studio to myself. No one's here.
It's very nice. So Patrick's coming in from the chart report. If you guys do not receive the daily chart report, your life has gone terribly wrong. You need to be checking that out every single day. Why don't we talk about yesterday's chart report? You want to start there? Anything stand out?
Yeah, absolutely. Sure. I mean, obviously Japan, that was probably the biggest standout theme. It was a pretty boring day for the major indices. S&P did 2 basis points, completely flat. Chart of the day was from our one of our favorite analysts, John Roque. 33-year highs in Japan. How about that, huh? Obviously there was that massive speculative bubble back in, I think it peaked out around 1990, right in the turn of the decade, and still haven't visited those highs, but it's definitely working on it. I mean, it's still about 20% below. So it's definitely got some work to do, but I think we could retest those, the bubble peak in the next year.
Is this the mother of all bases, guys? The Nikkei?
I think you could call it that, right? I mean, I was thinking about that yesterday, Steve. I was like, what is a bigger base than this, right? You don't hear of 33-year highs very often.
Newmont Mining.
Things just don't.
Newmont.
Okay.
JC, you're old. Are there bigger bases?
I'm telling you, Newmont Mining is a bigger base.
Okay. Yeah. Goes back to
goes back to the early 80s.
Yeah.
But yeah, I mean, and did that one go or did that one fail? What happened with Newmont?
Still basing. It's becoming the grandmother of all bases now.
Oh my gosh. I'm gonna have grandkids by the time the thing goes.
Dude, this thing has been consolidating my entire life.
So Pat, you're plugged in, you're paying attention to what everybody's talking about out there all day, aggregating, curating all of the best information. What are the big themes? Sentiment continues to be something that all of our guests are bringing up and we're talking about a lot. What are you seeing aside from that?
Yeah, I mean, there's so many different ways to look at sentiment, and depending on who you ask, it's either bullish or bearish. And when it's really kind of hard to gauge, I think that's information that sentiment might not be, super important. Although I think positioning is more important than sentiment. That's what they're actually doing, not just what they're saying. And that last tweet there, if you go back up to Lizanne Saunders' chart, she was pointing out that they actually got more bearish. We've been hearing all about this aggressive net short position among speculators and among large speculators, and it just got even more aggressive if that data is correct. So, I mean, man, the pain trade is definitely higher, right?
I mean, when were we talking about this, JC? Last month, early this month? I mean, this chart's really getting out there now.
Yeah, I mean, it's very extreme. And, when the large speculators historically are betting this aggressively on lower prices, you tend to get the exact opposite, very, very, in a very volatile manner. So, an unwind here to the upside in equities would not be surprising at all. I want to point to Ryan Dietrich's chart, which is showing the slope of the 200-day moving average.
Yeah, I love that one.
Right? So this is showing, it says another clue, the October lows are in place and won't be violated. The S&P's 200-day moving average is officially trending higher. Going back to the past 50 years, there are 10 other times this has happened, not once were there new lows made. In fact, a stronger higher trend was actually the norm.
You know what's great? You know what I love about this? Keep it simple, right, guys? Don't overcomplicate it. See what he just did there? And what a powerful signal it is? This doesn't have to be rocket science.
So the trend
and
is
Steve,
higher.
you and I were talking about this yesterday. I mean,
that's a great combination.
You and I were talking about this yesterday, how some of the best in the biz keep it super, super simple.
Yeah.
And simple isn't necessarily easy. You have to tune out a lot of BS to be able to keep it simple. But on the topic of sentiment, I will say I had a reader reach out to me a few weeks ago, probably over a month ago, saying, you feature this Dietrich guy way too much. He's a permabull, all this stuff.
He's not a permabull.
And I was thinking, I know, and I was thinking that's information right there. People are so sick of hearing the bull case. That is information.
And
sure, I mean, sure enough, the market's just kept.
Ryan's a good friend of all of ours. He's not a permabull at all. He's a realist.
Right. Yeah, it does great work on seasonality and stats and all that. And you know what? If he does have an upward bias, guess what else has an upward bias? The market. So
right. And understand who his quote unquote clients are. He doesn't necessarily have clients. He works with advisors, and advisors have a more positive tilt to their behavior because of what you just said. So just when you're looking at analysts and the work that they're doing, you have to understand who they're doing their work for. It's not for you, right? Understand who it is and understand who Dietrich's doing work for. Our financial advisors that have a long tilt. So if he's always short, he's not doing his job, and he's going to be out of a job soon. Right?
Guess what?
That's a great point.
I'd rather hang out with a perma bull than a perma bear anyway. I got nothing wrong with it. So.
Pat, I wanted to jump in here and ask you about the Buzz Report, which is something that you put out once a week, and you put it out on Mondays. So yesterday's is out.
Punch it out.
I want to bring it up here. So explain what this report is first, and then talk about some names that jumped out to you.
Show me.
Yeah, sure. You got the table. You got the table right there. So it's our list of about 30 stocks, and we're looking for trending tickers on social media. We use Likefolio's data, and basically what we're looking for is tickers that have shown a spike in mentions relative in the last week relative to their 2-month average, right? So you can't just look at like the absolute number of mentions, because then you just wind up with Apple, AMC, SPY, QQQ, the same tickers every time. So this is looking at it relative to its history of mentions, right? So, at first when we were playing around with this data, we thought of it almost as like a sentiment thing, but we're finding it's almost like unusual activity, right? Unusual social activity instead of unusual options activity, right? So it's showing you that something's going on here. All of a sudden this is getting attention, this stock, for whatever reason it might be. Sometimes it's a merger or something like that, in which case, we try to stay away. But in other cases, the thing's breaking out and nobody's heard of this. And one of my favorite parts about doing this scan is finding some of these hidden gems, these stocks that I had never really heard of, but that look really good. So we found a ton of good ones lately. I don't know if you can go to my screen, but actually yesterday we just punched out of. Can you guys go to my screen? Is that possible?
No, you're supposed to give the charts.
Yeah, well, if you
okay, next time
you can share your screen if you want to, Pat, but we don't have. You have to do that yourself.
All good. No, so we just exited one yesterday from a few weeks ago. It was KRYS. That stock shot up like 20% yesterday. I think it's Crystal Biotech. It's a biotech, but again, these smaller names that you haven't heard of. If you pull up the chart, it was. I should know that, but I actually don't. But it was just emerging out of this, I think it was an 18-month base or something like that. Like a lot of these bases, it seems like a lot of the bases right now, they peaked in, late 2021, and now they're starting to resolve higher. So I've been writing 18-month base a lot lately, which I think is interesting. But anyway, KRYS.
Great looking chart.
Yeah, so we exited that one, and then we also had another really good one, Green Brick, which was one of David Einhorn's biggest positions. But that was from the first edition of the Buzz, probably 2-3 months ago, and we punched out of that one last week. And that was just another beautiful base breakout. And so basically, when we take this list and then we just overlay our technicals over it, the same technical work that you see in the chart report every day. We love big bases. The bigger the base, the higher in space. I think that was Louise Yamada, right?
Oh yeah.
And yeah, like I said, we found some really good ones. This week we put on Wendy's. It's getting rejected a little bit, but it could work. And you're seeing a lot of these fast food names, JC. I know you're seeing like McDonald's and QSR is kind of up there too. And what's another?
Chipotle's been making new
group?
highs. Wingstop, Yum Brands, which is Taco Bell, Pizza Hut, and KFC and things like that.
Yum.
You know, there's continuing to Patrick, tell before we head up. We should keep Patrick for recess. Patrick, stick around for another few minutes. Stick around for recess. But Spencer, if you want to throw it up there where people can sign up for the daily chart report, they can get access to information about the buzz and how they're going to get that.
Yeah, I got two things here. For the chart report, which is the daily free email that Patrick does, the QR code is on the screen. There's also a link at the very top of this description on YouTube. If you go to the YouTube video, just scroll down. Description, the link is at the top there. That's the first thing. Second thing, if you want the buzz, that's a premium product that we're launching in beta right now. If you want to join that beta list, you got to email Pat, okay? Because it's super exclusive. So, someone just scanned the code. Nice job.
My email is super easy. It's just Patrick at the chart report.
It's on the screen. It's on the screen right now. Email
perfect.
Patrick at thechartreport.com. That will get you, if you just put like the buzz or something in the subject, he'll know that, and he'll get you on the beta list. Eventually, we're going to start charging for this, but for the moment, we're in beta mode, and it's going. So Pat's been doing it every
now while it's hot.
All right.
And before I leave, I just want to say you guys are doing an awesome job with the show. I am super bullish the morning show.
You're not
thanks for having me. I mean, you guys
You're not
had awesome guests.
You're sticking around for recess. You're sticking around.
We're not letting you.
All right, I'll be here.
All right,
I'll be here.
Run it, Spencer.
All right. Are we doing recess right now?
Hell yeah. Let's go.
We're doing recess now. I have to find my video.
I got a good one today.
We got questions too.
All right. Nice.
We got to do questions from the chat. Okay, where's my reset? My computer is being a little bit laggy. I apologize.
We got questions for Patrick too. Look at that. People want to hang out with.
Yeah, I know. Whoever said I'm in Bankers Hill, that's a pretty good eye there.
All right, recess time.
All right, Patrick, best taco in San Diego. Go.
Oh God.
Oh man, so there's a place called the Taco Stand right around the corner. But I got to tell you, I mean, their tacos are phenomenal. But I got to tell you, I'm a California burrito guy. You know, they have it's carne asada, French fries, maybe a little pico de gallo in there, some sour cream. But man, it'll change your life. Whew.
What about that place in Ocean Beach? That place in OB that Justin Paterno always raves about.
It's a taco place.
It's a burrito place.
I don't know. I mean, I'm sure there's so many
it's in Ocean Beach. Reach out to Paterno. And you gotta get chicken. And I never go chicken over steak. I always go steak, right? I'm telling you, you're going chicken. Chicken on the burrito. I know. I said the same thing, but he's right.
So this
How do you feel about rice in your burrito?
I'm Cuban, man. You know, I'm good with rice. I mean, Perlman, earmuffs if Perlman's listening, but you know, I like I'm Cuban, you know, put rice in anything. We eat rice for breakfast. We eat rice for dessert, right? Like there's just always rice around.
JC, where do West Coast tacos rank on your list of favorite foods? Like, I know they're high up there, but how high up? Just to give the viewers some context about what.
Very high. In fact, I would argue that the tacos on the East Coast are way worse than the pizza is on the West Coast.
I didn't ask you to opine on East Coast tacos.
They're not even tacos. They're unedible. There's no Mexicans here. Mexicans never went to New York. Like Mexicans didn't go to Miami. Mexicans didn't go to Boston or Jersey. Like there's just zero Mexicans here. So the tacos suck. The Mexicans are in California and they crush it, dude. I lived in Sonoma and, you know, we'd go to the taco trucks that are like up valley, you know, where the locals, you know, the farmers that are from Mexico, where they would go. So it's extra spicy, no English, no menus. You got to know what to order. Like those are the spots. Like you got to go where the Mexicans are.
I don't think I've ever seen you more upset, JC, than that time we went to that taco truck in Sonoma and they were closed. I don't think I've ever seen you. Steve, you can back me up.
Right? I'm laughing because I'm thinking about that this whole conversation.
I was heartbroken.
JC was really excited.
And like for the rest of the day, you were upset.
we were back in his old stomping grounds where he used to live in Sonoma County. He was so excited. He was talking about this taco truck all week while we were in San Diego. He was talking about the whole time. We get there, they're not there. It was like
it was hard. It was heartbreaking. You know, because when I left Sonoma and I went back for the first time, I was with Giancarlo, right? And we went to the taco truck and I'm eating the tacos and I'm like, you know, they're better than I even remember them. Like I went in there like with such high hopes because I used to eat it all the time and they were even better than I remember it. So like it just reiterated just how awesome they are and just how bad the ones over here are. But on another note completely, Spencer, throw up slide 2. Let's educate the people quick on what's going on here. We're talking about the best Syrah in the world. I feel like people just do not drink enough Syrah. This is the Rhone region, Northern Rhone in particular. So on the left, you got a map of France, right? So these are all the different wine regions in France. You got the Loire, Bordeaux, Champagne, of course, Alsace, Burgundy, Beaujolais, right? Provence. These are all the different wine regions, AVAs, if you will, in France, for France for that matter. So here we're looking at northern, or AOCs is what they call them in France. So specifically the north of Rhone. This is where Syrah is from. I would highly, highly encourage you to drink some Côte Rôtie. That personally is my favorite. You could drink Hermitage. You're going to pay more for it. So best bang for your buck, Côte Rôtie. If you just want to spend a ton of money, drink the Hermitage. What you're going to get is you're going to get mostly Syrah. They actually mix in a little bit of white wine in there as well. Just a tiny little bit of white wine, but it's almost 100% Syrah. This is the best Syrah in the world. You know, the Australians might argue otherwise. In California, they might argue otherwise, but your boy's going to tell it like it is.
So
the best Syrah in the world is Northern Rhone.
So what is Côte de Rhone then? Is this the same thing on the right? Is that?
So Côte de Rhone is going to be in the south of France, right? And Côte de Rhone is going to be a blend that's going to be based out of Grenache. So when you drink a Côte de Rhone, first of all, it's going to be a fraction of the price of Northern Rhone Syrah. Number two, there's very little Syrah in there. It's Grenache based in the south of Rhone. In Northern Rhone is where you're going to get the Syrah.
Got it. All right.
One last thing. There's a big difference between Hermitage and Croz's Hermitage. Do not buy or drink the Croz's Hermitage. If you're going to drink Syrah with the name Hermitage, make sure there's no Croz's before the Hermitage. Just like the other day, Strazza, when I told you to buy the Chablis, and I'm like Premier Cru or better only, or don't drink it. This is kind of like that. If you're drinking Syrah from Northern Rhone, do not get the Croz's Hermitage. It's got to be regular Hermitage.
I don't know how you remember all these little rules, but it's pretty remarkable.
Because Hermitage is very they're not rules. It's more like my personal guidelines. Like this is like me sharing my wisdom with you of my mistakes over the years and my younger, less experienced days. You know,
I'm walking up and down the wine aisle in Publix, picking up every bottle of Chablis, going, nope, doesn't say Cru on it. Nope, doesn't say Cru.
Côte Rôtie. If you're drinking a bottle of Côte Rôtie and you don't absolutely love it,
what do you eat it with? Talk to me about some meats. Talk to me about
anything like peppery. You want like something peppery. Like if you use a lot of pepper in your pork, you know, it could go good with pork. It could go with you could drink it with steaks if you want. I like it with pork. Like a peppery, you know, like a peppery pork, maybe peppery ribs. That's what you're looking for.
Good. Done. Let's do it.
Yeah.
All right. So Miami and Florida tonight. Let's go, baby.
I mean, you know, I'm gonna bring my my broom tomorrow.
I gotta get a Heat jersey. All right.
All right. That's gonna be your wrap, I think, on the show today. It is already 9:59. We got a busy day today, though, on the calendar. Oh, look at that, Jimmy Buckets.
Oh, and hey, we got Chart Report Spaces coming up.
I was going to say, so we got a Twitter Spaces an hour and a half from now, 11:30 Eastern time. The Chart Report. We've got Chart Request live at 1:00 today with myself and JC. Is it? I forget which of you is on Tuesdays.
Spencer,
it's me, baby. It's me.
Okay.
Spencer, are our Spaces hosted on Stock Market TV now?
Our Spaces are
Archive.
so they're hosted on Twitter. That's where they air live, and then they're re-uploaded on our YouTube channel after the fact.
for the
So,
recording, you can check it out on Stock
The
Market.
recording, the recording will be up about an hour or so after the space itself is over. If you missed it,
And we'll include the recording in the chart board too. So
if you're not already sick of hearing us talk all morning, you can go listen to us talk all afternoon too on Stock Market TV.
exactly 2 o'clock, part of the price action.
Yeah.
JC and Strazza there. 3 o'clock, the Flow Show. Strazza and Sean McLaughlin, Option Sean, will be on at 3. So busy day today, a lot going on. All right, everyone, that's a wrap. Thanks to Patrick, thanks to Kimmy, thanks of course to our guest friend Cappelleri. Thanks to all of you for watching. Smash the like, tell your friends, email us any questions, comments, concerns, questions at stockmarketmedia.com. And I think that's a wrap, guys. Any final words, final thoughts?
Miami in 4. Let's go. Let's just get it done. Clean sweep. See you, Boston. You blew it in hockey. Now you're blowing it in basketball too. Keep blowing it.
Go Panthers. Florida hockey. Yeah. All right. We're done.
Run it. I can't take no loss. I don't even know what it costs. I hit the